welcome to Zee Commodity Capsule, a segment designed especially in order to give you a wrap-up of entire week's activity in global as well as domestic commodity markets. Starting with bullion, this has been a relatively range-bound week as far as gold is concerned. In fact, gold is set to end the week largely unchanged. However, it continues to hold around its critical level of $2,000 and it has largely been around that level so far this month. But as far as domestic gold or MCX gold is concerned, we have seen it slipping tad below 61,000 levels. So you can say this week might end in a negative territory, positively -1%. However, let me tell you that MCX gold managed to touch its all-time high of around 61,399 earlier this month. Now, what are the factors which are supporting this strength in gold? Safe haven demand is constantly pouring in order to help gold prices gain higher. Softer than expected US economic data continues to support because this is fueling recessionary concerns. However, we saw headwinds coming for this yellow metal from dollar index. Dollar index has been relatively firm, although it is traversing between 101 and 102 levels. We are seeing that almost after 5 straight weeks of losses, dollar index is set to finish this week higher. Now, there are firm expectations that US Federal Reserve might continue its aggressive policy stance as far as the interest rate hikes are concerned, and this might move past May as well. And there have been slew of comments by Fed officials, Fed presidents on different occasions where they continue to support the need for policy tightening in order to tame inflation. So these are basically the factors because of which we see that gold was holding on to its range and continues to be on a positive trajectory. As far as international and domestic brokerages are concerned, they continue to hold a positive stance on gold. For year end in COMEX, $2,200 an ounce is most certainly a likelihood, and as far as domestic markets are concerned, 63 to 65,000 levels are there in the vicinity. As far as silver is concerned, yes, silver has been doing pretty much well, but we have seen it slipping from its one-year high of over $26, which it touched last week. Now, we have seen this whole week, it has been more or less trading around $25 levels. However, this is set for 3% weekly loss. Domestic futures, it had witnessed some strength past 77,500 levels last week. So you can clearly see that there has been a loss of 2,000 rupees as far as 1 week's time frame is concerned. However, international and domestic brokerages, they have upgraded their year-end targets after Silver Institute came with a report that the physical investment demand in silver continues to be strong, and this could be the second consecutive year when silver, global silver is likely to see or face some deficit. So $28 to $30 seems to be a likelihood as far as targets are concerned on COMEX, and 85,000 to 90,000 levels in domestic market seems to be likelihood. As far as base metals are concerned, it seems to be a mixed bag. Copper and zinc are headed for 3 to 4% of weekly gains, weekly losses, and aluminium, nickel, they might be headed for weekly gains. Now, there's a reason. US copper, although we had a brilliant Chinese data coming in, it did not hold copper's strength for a very long time because US economic data continues to raise recessionary concerns. Record low inventories continues to support copper here. Supply constraints are there, but all of these factors will likely support this metal only in the second half of the year. Tin also garnered some support out of the news regarding concerns of supplies coming in from Myanmar. Coming on to crude. Crude has been on the highlights because of the kind of fall this commodity has seen, particularly from a 3-month high to a 3-week low. Crude has is likely to face its first weekly loss in 5 weeks. It's on track for a weekly drop of nearly 6%. Softening US economic data, rise in the gasoline inventories, and slower global oil demand. All of these factors continue to weigh upon crude. Brokerages continue to see a sideways to negative trade in short term. Brent crude is likely to face a resistance between $87 to $89 in short term. As far as agri commodities are concerned, it has been in a weaker or sideways to weaker territory only, but ice raw sugar seems to be having a totally different track. The commodity has been seen trading past 25 cents this week, and it's hovering near its 12-year high. Same is the case with refined sugar. Supply tightening, lower output concerns from India, China and Thailand seems to be supporting this particular commodity. However, coffee, this was seen brewing pretty much until last week, but now we have seen after 3 straight week of gains, it has hit its break and iced coffee has come off its 6 months high. So is the case with Robusta coffee, which has slipped from its 14 months high. Prices are spooked on concerns that the worsening economic sentiment may hurt global demand. There's been mixed to weak trend as far as soybean and edible oils are concerned, but cotton will be on our radar because global and domestic cotton prices seem to be going in 2 different directions. Global prices are pressurized and are headed for 3.5% of weekly losses, but domestic prices may be headed higher because output estimates in India have been reduced and a strong demand is emerging from the Indian textile industry.